Hey, what's going on? So this is gonna be the second video for the channel here, and we're really just gonna be talking about maintaining a fresh watch list. Pretty basic concept here. This is more of a organization concept. This is how we actually operate within the marketplace, right? Or part of that a discussion around operating an aspect of the portfolio and a aspect of the observation process within the portfolio. And it's simply maintaining a fresh watch list, right? So yeah, last video, the first video, we really just proposed this hypothesis for how the markets work, right? Quick summary, quick refresher. The markets are not random, they are actually controlled, right? That is the hypothesis. This video specifically is going to be talking about how we observe and engage those markets, right? Talking about our process itself, not necessarily the market. So yeah, today's summary is that capital rotation does not care about your specialization. Capital simply moves where opportunity exists. Bringing it back to our 5 asset classes here, we are essentially constantly watching all 5 of these asset classes in the quote unquote watch list ecosystem. So this next point I have here is kind of fascinating. The average trader has either tunnel vision or information overload. There is simply no in between. And the objective of the retail watch list is prediction. So we are not observing these 5 asset classes for the sake of prediction. We're not looking to come to predictions. We are simply looking to get a state of where the market is at constantly, right? We're looking to simply be in sync with the markets at all times. That is the point, right? That 40,000 foot view, and ultimately that manifests as higher time frame analysis consistently. That is more than enough to have a proper professional in sync perspective of ultimately like as many markets as you can handle, right? More is obviously not better. And very there's never been a time personally where more was better. Um, I've had the best results focusing on 1 or 2 assets within 1 or 2 of these asset classes at any given time. So, really, our third point here is that you can be a quote unquote specialist while at the same time having an awareness of what's going on in all 5 of these asset classes. We are getting that broader perspective, bringing you back to video 1 of how capital and liquidity is moving in and out, to and through, and in between all 5 of these asset classes at all times. That understanding only aids your specialty in that one asset class or that one asset, right? Simultaneously, that is just in general an evolving situation. And so our watch list is also constantly evolving. So, yeah, this is kind of a cool visual here from AI. We got our 5 markets that we're watching constantly. So, essentially, man, at any time, fund protocol calls that we study 2 markets in depth at a time. The rest are essentially strictly higher time frame analysis. That doesn't mean that we can't necessarily be in an investment in, like the assets or the asset classes that are quote unquote on the bench, but it is a controlled situation. Ultimately, it's kind of a low risk situation, right? If we're in a position that requires active management, it's in the active section, right? That's where majority of risk is. Bench quote unquote monitored risk is very minute, right? And ultimately, like personally, it's rarely even existent, right? I'm basically only operating in 2 markets at a time. and definitely only two asset classes at a time, right? But most of the time, dude, it's really like two assets: Bitcoin and NASDAQ futures, which is an indice, right? So personally, right, that infers that there's daily analysis, a fresh watch list, essentially a like constant development of narrative with the watch list and the thesis development. What's going on with these assets? Who's in the money? Um, what is the retail thinking about what's going on right now? Where are stop losses? Where's liquidity, et cetera, et cetera? Bring it back to the price engine. What state are we in? Are we in that consolidation, expansion, retracement, reversal? Based off of what we're in, what are we anticipating next, right? And then within that, we're looking to form trades. So yeah, not really talked about a whole lot, right? Is this concept of specialization? Everybody's really looking to spread wide and essentially cover as many markets as possible, get as much data as possible. And there's nothing wrong with that ultimately if your fund can handle that or if the portfolio can handle that. Or ultimately at the end of the day, like if the operators of the portfolio can handle that, personally just as like a one man band can really only focus on a couple of these theaters at a time. So yeah. And again, that's really not wrong, right? Um, I won't go too like more in depth with that, but the average person in general or the average retail trader would assume that like more activity is better, right? Wolf of Wall Street, trading all day. Even they weren't even trading in that in that movie, but uh, you know what I'm saying though, right? Intense go 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 attitude all day every day, trading every day. And man, like I don't even trade every week, you know, and that's like a good thing. That's actually good. So with that being said, why would you try and stretch your mental bandwidth too hard? Why would you go out of depth, or ultimately why would you like sacrifice focus to be able to mediocrely, I don't even know if that's a real word, but um, to a significantly lesser degree you are able to focus, right? So yeah, I mean pretty constant uh, process here. This is how I operate every day, and ultimately I do this every week. Ultimately just checking what's happened in these indices this past week, what's happening in the crypto world. Those are my focuses at the moment. And then, really for like bonds, commodities, stocks, pretty much just tracking those off of the weekly time frames. And yeah, we'll get more in depth into that, right? I'll make it, the next video will essentially be um, like executing watch list ecosystem development, literally just like walking through my process. But yeah, something to think about, right? We really don't need a whole lot. We want to be aware of what's going on in the markets. We want to have that quote unquote constant awareness. But at the same time, too, we're definitely not looking to sacrifice focus and ultimately open ourselves up to unnecessary risk simply because we want to be in all these markets at once and, feel like, someone who's really smart. There's traders who literally take like a couple trades a year and they're set, right? There's traders who trade for, a couple months out of the year and then they're set for the year. Saying that, say, time put in trading does not necessarily correlate to ROI. Bringing it back, right? We talked about this last video, market efficiency paradigm. Everything we've kind of been talking about in this video has been sort of like a overarching commentary on this dynamic here. So yeah, thanks for watching. Peace.